On the domestic tax crime point, when I read it, I said, like Malta being an international financial center, does it make sense that our focus should be on domestic tax crime? But then reading into it a bit deeper and maybe having a decent knowledge of the banking sector in Malta, I start to say, well, yes, we have the main domestic banks have a lot of local transactions, even though there is international business obviously going through, but there's quite a domestic focus. And then reading the part on financial institutions where the focus is more on international tax, potential evasion, right? You start saying, yes, I can understand why the NRA is saying this. I don't know what your reaction was, as in, do you see more potential domestic tax evasion rather than foreign companies or individuals using corporate setups?
If I may, I think banks have matured a lot in the last 6-7 years. There's been a lot of maturity within the banking sector vis-a-vis the controls put in place for money laundering. And tax is obviously a predicate offense for money laundering. And I believe that major tax evasion is not, or they're not using the banking sector for this type of crime. And in fact, I think even in the NRA itself, it mentions this point. And this is being shown as well from what we see from a filing perspective.
So you confirm?
So I can confirm it. I agree with that. And we have a lot of controls when it comes to the reasons why accounts are being opened, the purpose of the account, the nexus,
That's a very important factor that's being mentioned by Mark and even by NRA, the nexus. In fact, earlier on, we mentioned the summary of customers. Mm-hmm. Most of those customers...
Those were de-risked, right?
Yes, de-risking, fine, but step behind, previous to that most of them are residents of Malta. Most of them have a clear nexus with Malta. Most of them are just living in Malta. So this yet again ties in that potentially the major tax crimes are domestic. And yet again, I agree with Mark when it comes to controls. I think banks in the last decade matured a lot when it comes to controls, understanding tax crimes, etc. So this is understood, at least from my end, that the major tax crimes are happening locally. Maybe not from all the Maltese citizens, there could be other nationalities, of course, but it is still domestic. Because most of them are living in Malta with a Maltese nexus that, yet again, this is highly mentioned, nexus in the NRA, even as a risk of no nexus. So this in itself keeps on for banks, what Mark is saying, that without nexus potentially, and most likely I would say, we don't open accounts. So then it continues decreasing the risk of foreign tax crimes without having some sort of nexus with Malta.
The purpose of account is very important because you can't afford to get it wrong by having a company just opening a bank account with you just to pass a transaction and forward it to another jurisdiction. That for us, I think for the banking sector is a big red flag, for example. So the purpose is very important, and I think the banks have become better in understanding this side of the risk.
So what you have is potentially a shift elsewhere, right? So, and the NRA itself, I think reading between the lines, says it, right? So if you look at the fact sheets issued by the FIU along the past few years, if you take the one on tax, it speaks about international tax evasion rather than domestic. So the problem is there potentially, right? It might have shifted elsewhere, right? So you mentioned, I believe, 32,000 bank accounts being closed by 7 banks over a period of 3 years, which means that they moved elsewhere, possibly?
Yes, and in fact they actually do say that the NRA does actually mention that potentially these have moved to the financial institutions, possibly they're talking about PSPs, etc. What is interesting to note is that the fact that they de-risked those type of customers, which you said, those that have no nexus to Malta, those transacting with higher risk jurisdictions, those with complex structures.
The citizenship by investment.
So it makes sense that if the bank de-risked and is no longer onboarding these type of customers or being at least more selective, then it makes sense that possibly they would not be seeing foreign tax crimes However, like you said, I'm still certain that it exists, it just shifts to another sector.
So the question is sort of where, at least in your views, without disclosing any confidential information, where do you see that potentially these bad actors, or potential bad actors, because it could be simply a situation of falling outside my risk appetite. So where do those customers that fall outside your respective risk appetites potentially end up?
So most probably it's where there is less or lack of controls. So whether it's another jurisdiction, because we know that it could be that other jurisdictions adopt less controls or less scrutiny on the banking sector. Also local banks that maybe do not operate the same level of controls that the bank that is exiting a particular customer might choose to go to another bank with less questions being asked. But no bank likes to exit a customer. So with every exit, there should be some form of an explanation. And exiting a customer, it's not a simple matter of somebody thinking, let's exit this customer today. There are a lot of drivers. It could be the activity of the customer himself. It could be the responses the customer is, or the lack of responses the customer is, and the cooperation of the customer. But it could also be led through other third parties that have an impact on the bank, like correspondent banking. Some of the risk appetite of the local banks is not only decided by the bank itself. It is also, you need to take into consideration as well the appetite of your correspondent bank. Without a correspondent bank, you cannot transact outside of Malta. So sometimes this risk appetite is not something that the bank itself chooses, but it's a mix of your local appetite and the appetite of your connected parties, correspondent banks, etc.
If I may on this, I think there is two sides of the coin on this, right? Hearing about 32K that were de-risked, this shows, I think, a level of maturity. As Mark said, exiting a customer definitely is not on the agenda of a bank. Mark, a bank exists for business, right?
To make profits.
To make profits. So we start with that. So definitely it's not something that we should enjoy with, right? That we say, okay, we're exiting this customer or that sector. Even understanding EBA guidance. Recent EBA guidance was for financial inclusion.
Yes, the unintended consequences of de-risking is one of the biggest issues that the FATF is looking at.
Exactly, and this clearly highlights that, and in fact EBA highlights it, that we need to have controls rather than not onboarding specific sectors. So this is where the two sides of it highlights. However, I say banks have become more sensitive to certain expectations. Mark mentioned correspondent banks, definitely they play a major part in this, but not always, and not only correspondent banks. We also have, as a bank, right, when we need to be sustainable, we matured a lot, as I said, in recent years, so the whole sector. So this highlights that potentially, you said, Manfred, where are these people going? Maybe not everyone agrees with me on this, but I think nowadays it's much easier to access the financial markets. Right, in previous years, recent years, potentially just had few banks in Malta. You had to go wait in a queue to open a bank account, ask you some questions. You put that questions into some supporting documentation, and that's it. Nowadays, you just need to onboard and put another challenger bank, another PSP, from the comfort of your home. Right, with potentially asking you less questions than what the local banks are asking. And so this also is leading to a more de-risking exercises.
So access to financial services, we're saying, in potentially different jurisdictions, not necessarily banks, right?
Agreed. And also, if we have to give it a broader context on this, the de-risking that we are seeing in recent years, it's not comparable to what we did in the previous years. Right, there's a sector of this. Let's exit everything. Let's exit everyone. We don't want this or that. I think the risking nowadays, Mark, it is more on a BAU basis, right? The way how customers are being exited, yet again, because of major highlights, not because we think that, right? I think it's on a BAU basis. And this keeps on showing that this sector keeps on being matured, rather than saying, okay, this type of sector, we don't want it. But we say this type of customer, we're not, we don't happy to abide. And something that is really important is, which potentially goes against the EBA financial inclusion guidance, is that every institution, every credit institution have a customer acceptance policy. And that's in itself, risk changes because of the external factors which at times banks does not have control on, which at times makes some exits that needs to happen from day to day on a BAU basis.
And this is a topic we discuss a lot even at Malta Bankers Association. We were part of the Malta Bankers Association as well. And I can assure everybody that there is a bank for every type of customer here in Malta. But we are in the EU, and you can open a bank account within the EU. You don't have to open a bank account in Malta. So sometimes the decision is not taken by the bank, it's even taken by the customer or the prospective customer itself.
Mark, which is sometimes easier than open a local bank account. Right? Remote onboarding.
And we see it happening a lot with various sectors. The corporate service providers today have moved to using payment service providers more than using banks, in essence. You mentioned Nexus, the Nexus to Malta, right? And that is one area where banks, I think, have been consistent in reducing or eliminating completely the services being provided to companies that have no nexus at all to Malta or very limited nexus to Malta. What to you would make a company acceptable and what would not? So how would you define that nexus? So do they need to have a place of establishment? Do they need to have employees?
I think this question, or this answer perhaps, changes a lot post-COVID, right?
Yes, because
and we need to give a context for that, definitely.
Yes.
Even my own thoughts, my personal thoughts changed when it comes to Nexus, previous or post-COVID to where we are today. And this is, I think, where a starting point that we need to understand. Let's tie Nexus with the purpose and nature of the account. Clearly highlighted within the IPs, and I think this is one of the most basic and important elements for banks. To understand why a customer needs to have a bank account in Bank Y or Bank X, right?
In Malta.
In Malta. This is the first question, I believe. Even to start not understanding Nexus. Why I need a bank account in Malta and not in jurisdiction X. With that answer, one would understand the purpose and nature. Clearly highlighted in the IPs, and I think more than that in our understanding of risk, Mark. This is something that's the basic of. Secondly is, what was not Nexus in previous years, potentially today is Nexus. You don't have to come to Malta to make business in Malta nowadays. You don't have to be an employee living in Malta to be an employee of a Maltese registered organization.
And that's why, because of this
so this is
obscurity,
I think,
that's why I'm asking the question.
Agreed. I think even myself and Mark sits on various committees, etc., locally, and we need to understand the business in general. And I think making our roles as MLRO, it's important to listen and to understand. So the issue of Nexus, definitely by far it needs to have something happening in Malta, right? Trading activities, offices in Malta, having a purpose, having some financial institutions or financial expectations in Malta, right? So all of these highlights. However, yet again, Nexus and account purposes, I think it will be a mistake if we split them. Because there could be someone in jurisdiction X which needs an account in Malta because it's servicing a Maltese client base without having offices in Malta, which post-COVID this was unheard of. Right? Recently mentioning a case, for instance, someone non-EU needs an account in Malta because he is working with a Maltese company.
But he resigned.
And he never came to Malta. Yeah. It's an IT company, you know, all of these expectations, all of the working can be done remotely, right? This is just the personal expectation of Nexus. Same goes to the two companies. Yet again, with companies, perhaps we need some sort of more tangible Nexus, right? And this comes then yet again with the account purpose, because then the question would be, okay, so why you don't open an account in another jurisdiction? Why you need this jurisdiction, right? So this is, I think, where we really need to understand.
It all boils down to the purpose and finding a connection between the purpose and what the customer wants, how to use the account with you. Opening an account just to receive and transfer money somewhere else, you don't need. That's not real Nexus. You need to find the purpose.
But having a registered office in Malta is not enough to establish Nexus, right? Do you expect to see employees on their books, right? Even if they're living elsewhere, but would they be on the books of the Maltese company? So this is what you expect.
So having just an address, I think we all agree, it's not enough, definitely.
Of course.
Right, so because you can have rent somewhere and there should be a Nexus, definitely it's not. Yet again, having employees then to work with, it much depends on the business itself. Because there are some businesses, some organizations which it's understood, right? I think even nowadays banks are having people working remotely. So this is definitely something understood. However, then when it comes to companies, I keep on highlighting, and I think we have mutual agreement on this, myself and Mark, the account, purpose and nature. And this is where Nexus, we start understanding Nexus.
But there's also substance, I believe, beyond just Nexus. So it's not just the link with Malta, but you want to see actual substance.
Some connection. Whether you have employees here on the company, because
accounting where it is happening, tax where it is being done, activities happening in Malta, trade happening in Malta or elsewhere, right? So this is in, but yet again, in general, because different expectation, different sectors, which make different Nexus. We can mention maritime sector. It's different than other kind of sector when it comes to Nexus, right? So all of these highlights that potentially we need to delve a bit deeper when it comes to understanding Nexus post-COVID. Right?
And that's what the banks are doing, I presume, right?
Even changing a Nexus calculator. I think nowadays banks have a Nexus calculator, right? To be objective, not subjective. Why Mark have Nexus and I don't have Nexus? So we need to have some sort of an objective calculation why this is happening. So even this potentially needed some sort of tweaking post-COVID, because expectations have completely changed, the landscape have completely changed. So this is, I think, where it keeps on getting. Yet again, we speak about the NRA, Nexus is one of the highlights of risk.
Yeah. In almost all the sectors.
In almost all the sectors. Mark mentioned customers were just receiving an amount of money just on the same week, on the same day, being sent to the jurisdiction. So we're just here as a pass-through. That definitely issue of a red flag. Definitely no Nexus. So this is all where it boils down, actually.
To be fair as well, Manfred, there has been a lot of improvement even from the company registry as well, from an MBR perspective, which was an issue that was included as well as part of the FATF findings, and there has been a big cleanup there as well. So I think this in itself is helping us banks as well, that companies that are approaching us are having Nexus. I think this was a problem even 7-10 years ago. But we are seeing now that companies are, because even most probably even the MBR are understanding better the reason for these companies opening up a company in Malta.
It all boils down to the effectiveness of the measures being applied, because obviously the original question was, where are they going? Yes. You know, these higher risk customers. I mean, if the banks have strong controls, you know, they have this Nexus calculator, which they're becoming a bit more selective on, you know, who has actual substance and Nexus to Malta, where are they going? And I mean, the NRA actually mentions that there are other sectors which have weak controls, and they actually mention them specifically. For example, the financial institutions in general, they actually mention the weaknesses, for example, in transaction monitoring, weaknesses in governance structures. So potentially, I don't know, potentially these type of customers, when they don't have an access to Malta, for example, they say, listen, I'm not going to bother going to the banks because they're not going to onboard me, so I'll go elsewhere. And then everything else that we mentioned in terms of higher risk, in terms of tax, foreign tax crimes, complexity, etc. Obviously, that follows then on that trajectory. Yeah.
So what we're hearing about is that banks do a lot of filtering, right? So when they decide who they want to onboard, who falls within their risk appetite, or else at a later stage when they decide, listen, unfortunately we don't want to continue this relationship. It's all a question of filtering. And the NRA, I think, helps in that respect, because obviously it goes into various other sectors, because it deals with subject persons, and a number of those other subject persons are also clients of the bank. So the information that goes into the NRA dealing with those sectors, whether it's gaming, CSPs, notaries, lawyers, etc., estate agents, what have you, is of value to the bank when the bank determines which entity that it wants to onboard or continue a relationship with, right?
For sure, and in fact, the NRA actually tells you that you should not only be reading the section that applies to you, but in general you should also be looking at all the findings of the NRA, because obviously some of the sectors that are mentioned in the NRA will obviously be your customers. So indirectly or directly in some way, they would affect your risk, your overall risk. One such section, for example, is the gaming industry. So maybe I can address a question to Ryan. In the section outlining the risks of the gaming sector, the NRA, and I think which was sort of something new that we saw in this NRA, they actually mention that those gaming companies that operate through a recognition notice framework are actually considered to be higher risk. So a question maybe is this something that you consider when you are onboarding or thinking about onboarding a gaming company?
And maybe what are the factors you do consider sort of to separate the wheat from the chaff, and they say these yes are good for me, those not really.
Yes, sure. So let's even highlight this question, which was have been discussing in the past hour or so. So the bank has a customer acceptance policy to start with, and as a bank, gaming is a restrictive relationship. So when we come to onboarding, we don't accept anyone or anything when it comes to gaming.
Restrictive because of the high risk
elements. I agree, because
right?
Gaming is, I think, by nature makes the activities of a high risk nature. Not only is a higher risk, but of a high risk expectation. So definitely we are looking into these, I would say, expectations, and also from a regulatory perspective. We earlier we mentioned correspondent banks, CAP, customer acceptance policy, bank risk appetite, etc. So this all ties in what we are looking up when we are onboarding gaming, for instance. Yes, by far we are looking at this situation, even I would say having communication regular with MGA, the regulator, when it comes to gaming, understanding that in order to onboard a gaming company, it needs to have, I would say, definitely a nexus and definitely these licenses that we are referring to recognized by the local regulator. However, as an institution, gaming is of a high risk, right? Because I think one of the elements of gaming is we understand certain red flags that one may highlight. I would say there is controls, good controls around gaming, even that the gaming companies are subject persons themselves. Yes. So that gives us a bit of more.
So we're speaking about gambling here, right? Correct. So not the game development or games
it's
as
just
a video
the gaming company, right, offering the service of gaming itself, not the affiliates, not those offering services. So the subject person itself requires to have controls, even the company itself offering the gaming. So I think this ties up very well. Filtering, as Manfred was earlier mentioning, I think we are very selective in what we are doing, even comparing customer base with how many gaming companies we have. It's fractional and very minimal, and this keeps on highlighting, I would say, that in order to be onboarded in a high risk sector, you need to have all the tick boxes when it comes, including recognitions, including MGA licenses, when it comes for this. Even those may not be enough, because they may be giving all of these factors, all of these regulatory expectations. However, when it comes to bank, it could be that that particular company falls out of their risk appetite, either because of other areas of coming from high-risk jurisdictions, either because of certain products or services being offered by the gaming company. Right? Maybe I'm just giving one which is out of risk appetite, having cash when it comes to gaming. Right, so this is all of these expectations that we are mentioning about. Definitely filtering is happening on a daily basis when it comes to onboarding.
And do you look at, I don't know, the business risk assessment, the risk appetite, what type of games?
Definitely screening is happening as we speak. We didn't even mention sanctions as we speak. So nowadays banks are, I would say, very sensitive to their screening activities, to their business risk assessment, to their customer acceptance policy. Their customer acceptance policy, if it's making sense with our customer acceptance policy. So this is all, I would say, on a BAU when we do this customer reviews, that we are asking for certain documentation. We didn't mention the word as yet on a risk-based approach, right? Because this, I would say, word of risk-based approach, it is one of the most, I think, important elements in this age and time of financial services, understanding the risk and putting everything into perspective.
And the national risk assessment helps in that respect because it tells you what you need to consider as higher risk, as Martina mentioned, the recognition notice as an example.
You highlighted this, I think, spot on this. Even, I think, for the very first time, correct me if I'm wrong, they're even highlighting recommendations. Yes. And this is extremely helpful for banks, right? Because we have some comfort that they are NCC highlighting that you have to see this, see that, and this is what we are recommending. Of course, following on our products and services, because it may be out of our appetite, so that particular recommendation could not make sense with the services being offered. However, most of the recommendation, definitely, we are servicing such customers. So that is one of the most important elements that I hope that the next NRAs will keep on having recommendations on banks.
It's obviously the NRA gives a lot of detail. For example, when you're looking at the gaming sector, it gives an overall risk rating for the gaming sector. However, it does specify that certain types of gaming companies, obviously higher risk, type of products being offered. If it's peer-to-peer poker, if you're accepting crypto assets, for example, is a higher payment method. So obviously, at least my assumption is that banks, when they're doing their filtering, they are looking to see whether the type of product and the type of payment method, the type of customers, type of jurisdictions that gaming customer is accepting falls within their risk appetite as a bank as well.
And that's why the business risk assessment of the gaming company is very important. So not just for itself to assess its own risk, but also to inform the service provider, listen, this is the type of risk exposure that we have, because these are our products. We do slots, but we don't do poker, right? And we don't do casino games, but we do sports betting. And obviously that's going to have an impact on the risk exposure and obviously on whether it falls within the risk appetite of the service provider as well, which would be the bank in this case.
Similarly, so other areas were obviously mentioned in the NRA, and we can just mention one, the corporate service providers, for example. So in the text, what it says is that basically the services being offered by the corporate service provider will affect the type of risk of that particular corporate service provider. So if, for example, I'm a corporate service provider, but I offer mainly directorship services, they're not saying that there's no risk, but they're saying that the risk is considered to be much lower than if you were a corporate service provider mainly offering registered address to your customers. Why? Because obviously you have less visibility over what your customer is doing. So maybe I can address a question to Mark on this. Is the bank considering the different types of services being offered by the corporate service provider when deciding whether to onboard such a customer?
Yes, and it all boils down to the customer risk assessment, not only the bank's customer risk assessment, but also of the prospective client. So the corporate service provider itself. So we need to understand their clients, because we need to understand what risk they will be bringing into the bank. Because ultimately, the money that will flow into the bank will be the responsibility of the bank as well. Although the CSP in itself is a subject person, as per the gaming and Ryan said, but we need to understand the risk appetite of the CSP, their type of customers, and the risk they will bring into the organization. So this all boils down then to having a relationship built on trust. Because once you have a CSP, you can't check each and every customer. So you need to have the comfort that their risk appetite matches yours. They are abiding by their own policies, their own standards, their own customer risk acceptance policies, and they are onboarding the customer types that they told you that they are onboarding. So this then builds a trust, but you can't just trust with eyes closed, and sometimes you need to have the arrangements as well to be able to ask for specific documentation, policies, standards, and also, yes, and also on particular customers, their own customers as well.
And the NRA helps in this respect by identifying certain aspects of the corporate services business that increases the risk. So if I'm a CSP that only provides registered office services, or the number of employees per customer is very low, so I have, I don't know, 300 entities that I provide service to as a CSP, but I only have 4 employees to handle all those companies. So it mentions a number of factors that raises the risk of the CSP, and I presume that this is what you also look at from a filtering perspective, right?
It all boils down to the purpose, as we described before as well, and then assess whether what the customer tells you makes sense. So the make sense test is very important because, as you mentioned, having a large amount of customers and then a small amount of employees to service those customers, being a subject person themselves, then you need to ask, is this making sense? So for us, I think it's the purpose and the make sense test are very important.
Mark, you mentioned something about the banks looking into, for example, the CSP as a customer who's a subject person, but you still need to dig deep into their customers, and because the money is flowing in there, well, you obviously they'll be in your accounts. So another aspect to this would be the use of pooled accounts, which has been also identified as a higher risk area, possibly because of the possibility of misusing such accounts, the difficulty in tracing the origin of funds. And in a statistic mentioned in the NRA, which is quite interesting, is that the total value of transactions flowing through pooled accounts during 2020 amounted to circa 20 billion, which we see to be quite high. I mean, when we think of pooled accounts, we think of notaries, pooled accounts, lawyers, maybe there are some real estate agents who might have pooled accounts, collective investment schemes. How do you see such a high number, making sense? Because at first, you would think, could it possibly be that the funds being held by notaries, for example, would raise such a high amount of flows? I mean, what do you think on that number?
I think it all boils down also to the numbers that are in the NRA itself, where we find that financial institutions, the number of their customers, payments, etc., are much higher than those of the banks, right? And it's an accumulation of the different sectors as well, like the pooled accounts are used by the notaries, collective investment schemes, financial institutions that do not maybe offer direct payment services, but then they use the banks for their customers' payments. I think when one looks at the financial institution sector, together with the banks and other subject persons that make use of these pooled accounts, the numbers start to make sense.
Even the fact that property has gone up. So obviously that would also factor in. I don't know, Ryan, from your experience, what you see.
Yes, definitely. And I think also it's well factoring out. And this is, I think, one of the potential contexts that also we need to highlight in this, without confirming or not the figure, because yet again we don't have the data coming to that. However, this particular NRA was at times of COVID, correct?
Yes.
Right? And part of COVID times, right? And potentially, I may be corrected on this. This was once the year that it was a boom in property selling and buying, etc. Right? Even because of COVID, you know what I mean, all of these highlights, etc. Tax reductions, etc. So this may.
It was one of the sectors that didn't slow down, if I'm not
Agreed,
mistaken.
and I think it was one of where there were a lot of promise of sales, etc. during particular year. I not know exactly the year, but it was. So this may also contributed to that, because at the end of the day, those were clients' money. So if this property actually were, I would say, so high up when it comes to particular years, that may also increase it. Yeah, good to know and good to understand maybe, but we cannot have data, or at least we don't have data now, to compare and contrast with previous years or with the upcoming years to see and understand if that figure is stable, so that we understand that this is making sense vis-a-vis how economy is working, how the sector is working, how these people that having these customers with clients accounts are operating their accounts. Right? Or that was a particular year that can contribute to this, because let's face it, this amount is quite high, right? So and even as Mark said, comparing banks, financial institutions, this amount, that potentially leads that at credit institution there were higher amount at customer at our pooled accounts. In itself make the account of a higher risk. If not of a higher risk, myself I consider as a higher risk. Because we're just keeping money of someone else, not of our customer.
Exactly.
Which could not be our customer, which could not be aligned with our customer acceptance policy. And this yet again ties up well with screening, BRA, CAP, which was even from, maybe speaking from experience. And yet again, lately we have seen a very, I would say, improvement for all these DNFBs that are considered as having these such of accounts. We have seen a shift, positive shift, meaning more mature, what we're asking. But I can recall some cases which we were asking for CAP. What is a CAP? Right? Because we are just keeping the money of the clients. So I need to understand your risk appetite, right? And why are
who
keeping
you
this.
accept and who you don't.
So this is maybe to put on our diary, a diary note. So let's compare and contrast this figure with the upcoming figures to see if this was one particular boom, property, other segments that were quite on the high rise in the past years, or it's a stable amount that we should put even more focus on, much more controls on, and also continue giving its focus.
And I think it would have helped if we saw further information in the data, because okay, pooled accounts, but there are so many various types and the users of those pooled accounts. So even to understand which are the sectors where the higher numbers are
definitely.
rolling.
Yet again, it could have two sides of the coin, because potentially there might be some savings account being used as pooled account.
Yes.
So these are not being captured within that figure. So this is, I would say,
exactly.
It's much depends on the KYC,
distort,
CDD of the banks. Yet again, the pooled accounts, there are some cases, legacy issues, which you have a savings account and it was being used as pooled account. Hence, transaction monitoring comes into place. Is the account purpose and nature being used as expected? So shall we change the product code from a saving to a pooled account? So this figure, which I understand it's a very, or should be a very accurate approximate of the figure, could highlight yet again that amount itself, because once again, it's a material figure.
No, and I'm happy you mentioned this, Charlie, because I mean, when you speak about 20 billion, I mean, it's substantial. And I think we need to dig deeper into it, because it is, as you said, a high risk area, because you don't know who the customer is. So it's the same figure that the NRA speaks about in terms of transactions carried out by payment institutions. So from all the thousands of customers of payment institutions, and there are nearly triple the number of customers onboarded by financial institutions, payment service providers, than there are bank customers. The same transaction figure, 21 billion in that case, is the same figure that we have for pooled accounts.
Only. For pooled accounts
only. And we don't know what is in those pooled accounts, because the NRA doesn't give us information on. So it could be customer investments, it could be property, deposited into the client account of the legal professional. It could be many things. It could be money remittance services, right? So they would have a pooled account and then they have an account with the bank, so funds going from the customers into the pooled account with the bank. So it could be many things, but ultimately having an exposure, banks having this type of exposure in terms of their pooled account, considering that they don't know who their customer is over there, I think it exposes banks to substantially. So, I assume that the banks need to carry out an exercise on the basis of this finding.
Definitely, and also I think not much more else to add from what you're highlighting. High risk definitely, and also the governance around approving of pooled accounts, right? Because we always keep about onboarding, which once we're onboarding someone with a pooled account, it's exposing to X hundred of clients more than just onboarding that one customer. So this even, I think, is level of approvals, governance around such, in understanding the risk of a pooled account. Because at times, institutions may say, okay, it's fine, it's a notary should have a pooled account, of course it should have. But once we are giving such product, it's exposing us to an array of risks. An area of risk, not just money laundering or just the conventional, I would say, financial crime. So this is exactly where we need to focus on, with potentially also having some specifics on our transaction monitoring, specifics on pooled account. We have seen cases in the public knowledge nowadays of misuse of pooled accounts, right? Of personal transactions in pooled accounts. I cannot understand setting cash in pooled accounts. And this is all, I would say, specific controls for a specific product. Also coming up to your very good actually comparison on figures, that potentially highlights, I would say, the array of product suite that a bank's credit institution have when compared with payment services, which banks in itself, credit institution itself, are also payment services. So this leads that, considering, I would say, the services that banks are offering, it is much easier to go with a bank for a payment services rather with a specific one. Why? Because that particular customer have much more products with a bank rather than with a service payment service institution. So yet again, very interesting
Something
figure.
to look into, I would say.
And we should keep an eye on the upcoming NRA to compare and contrast with that.
And it could be that correspondent banks will be looking at this figure as well.
Definitely.
So you need to.
Yes, and as you mentioned, Manfred, it's important to understand what is making up those numbers.
Yes, exactly. And the working papers, the NCC at one stage said that they will try to make available their working papers sectorially, so maybe through the MBA, an exercise can be carried out to try and understand what those pooled accounts are.